Hello, JP Albano here again, co-founder and CEO of Significant Lifestyle Communities. In today's video, I'm going to talk a little bit about how to save you money on taxes, on your income taxes. Real estate is very popular among wealthy individuals for a variety of reasons. One of them that we're going to talk about today is on saving on taxes. So typically, if you're a high income earner, you've got a lot of ordinary income coming in. You need write-offs, right? So some people will buy a car, lease a car, buy a boat, buy a plane, buy all these different things. But what some don't realize is that you can also take that money that you've gotten from this windfall and invest it in real estate. And you can buy an apartment complex. And the IRS allows us operators and investors in those deals to write off and depreciate portions of the dirt, the property, the building, all the fixtures in an accelerated manner. This is called a part of a cost segregation study or a cost seg study. So how that works is when we buy a deal, we'll engage with a professional that specializes in just doing these things. And I'll explain how this stuff works here in a second here. And they'll give us an estimate. Let's say you're going to buy this property for $10 million. Some percentage of that is immediately, write-offable. That's not really a real word, but I'm going to use it for now. So out of that $10 million, maybe $3 million or $4 million is write-offable in the first year. And so we'll be able to take that amount of money and distribute it to our investors in a kind of a calculated way. And then you can take that and apply it to you get a special form, you'll apply it onto your income tax and write off a portion of the money. So give an example here. Let's say you had to write off $500,000. You had the wonderful problem of having to write off $500,000 from your taxes because of some great event that happened in your life. Well, you can take that $500,000, invest it in a deal. And typically, a lot of the deals that we look at with these cost segregation studies, and I'll get into how this works here in a second here, is most of the times you're able to get anywhere from a 70% or greater of your invested dollar returned back as write-off in year one. So for example, if it was $500,000, I should have picked up $100,000, you'll be able to get $70,000 as a write-off in year one. Sometimes it's more than that, depending on some variables there. But when investors look at that, it makes considerable savings because they don't have to write Uncle Sam a check for that $100,000 or $500,000 in this example. Another video I'll do, because I don't want to make this too long, I'll talk about how a cost seg actually works, but tax advantages and accelerated depreciation and bonus depreciation are all these really exciting terms that investors are used to hearing or understanding, because it really impacts their bottom line when it comes time to do their taxes at the end of the year. And real estate is a fantastic vehicle for helping to shelter those sort of things. So if you have any questions, feel free to reach out to me. Also, it's worthwhile reaching out to your professional tax consultant or advisor for tax-related matters. But my job here is to just give you little bits of information that help you understand the implications and the benefits for investing in multifamily real estate. Thanks so much. See you next time.